The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on Tuesday's trade, as the dust settled, we found a little bit of follow-through from Monday's session, led once again by the wheat market. Some double-digit gains there. Corn and soybeans, row crops, found a little bit of green as well. A solid day in the hog trade. Also, really the only loser was some moderate losses in live cattle on Tuesday. Let's talk about this newfound positivity in these markets here in the early part of the week. Jim McCormick, agmarket.net, joins us here on Market Talk. Jim, welcome back to the show, my friend. How are you?
Doing well, Jesse. Thanks again for having me on. It's kind of nice to have me on a day in the green instead of a day in the red, which you seem like you've had a lot of them recently. But no, it's another good day for the producer right now, I got to say today.
Yeah, and I tell you what, I feel like these markets, getting a couple days strung together in a row of green on the screen is not something we've seen quite often here. Really feels like the last couple of years here, Jim. That we haven't had a sustained, even if it's a slow trickle higher, we haven't really had a sustained couple of days like this. So good thing to see. Wheat, again, the upside leader on Tuesday. We should probably start there. Sounds like a lot of weather concerns globally, just kind of helping drive some fun to short covering here across this wheat trade that's kind of helping, rising tide lifts all boats, so to speak, in the grains, Jim.
I think you really nailed it. I mean, what's going on, Jesse, is, we've got some dryness issues in the plains. There's a lot of rain coming in. I know some of our listeners looking at some of these maps and some of the QPF maps that are talking 1, 2, 3, 4 inches of rain for parts of Iowa and Illinois here the next 6-7 days. But if you look a little bit closer, the western part of the wheat belt's not going to get a whole lot of moisture. And then now we throw in what's going on around the rest of the world. Ukraine, they've got dryness issues. Russia, which I would argue is one of the reasons why we've seen wheat prices depressed, because they've had back-to-back really good years. They're now dealing with some dryness issues. So you've got some weather premium coming back into the market. And then you kind of got to look at kind of what's going on the macro side, Jesse. Over the weekend, Russia started going after a little bit more of the Ukrainian infrastructure. And I'm just speculating and wondering, it's kind of a situation now that the U.S. has re-upped all those billions of dollars of aid, this war is going to probably looks like it might have changed the course again. And you just got to wonder, is Putin kind of taking this mentality, well, if I can't get it, I'm going to destroy what you have and maybe take out more and more facilities? Because in general, what he's been doing is kind of staying away from infrastructure as a whole recently. And now he seems like he's starting to come after some infrastructures. He hit some ports over the weekend, and that, I think, put a little bit of war premium in. And then lastly, I think an argument that's really got the trade's attention was on Friday, you had India, one of the most populous countries in the world, came out and said, hey, their wheat stocks are essentially at 16-year lows. And the reason why they're at 16-year lows is it's not because they had production failure. It's because they've been essentially selling wheat out of their reserves to essentially fight inflation. Now, inflation is going on in the United States. We know that, but it's not just a U.S. problem. It is a world problem. Well, what they're doing is they're selling wheat out of their reserves to drive down the price of wheat because, what do you know? They're in a big presidential election year trying to keep food prices cheap. Well, this could become an interesting dynamic because as we see how their wheat crop progresses, if it is a shortfall, they're going to have to come in and buy wheat on the world market. But even if it's not a shortfall, but inflation kind of comes in and starts driving the domestic prices of India wheat higher, there is a very good shot that India will be forced to come into the world market, in essence, driving the world prices higher in attempts to drive their domestic prices lower. So you've got all those different factors essentially coming together with a fund position that is carrying this massive short position. If you look at the CFTC report last week, they actually added to their Chicago and KC wheat positions. And I think the last 2 days of trading, you're seeing some of these funds go, all right, we've got too big of a bet of a bearish position on for what's going on right now. And that's pulling the wheat up. And that is essentially spilling into the grain market at the moment. The other grain markets, I should say.
Yeah, well, and like to your point, all that combination of factors here kind of helping wheat being this upside leader. I wonder though, in the case of quart of beans, yes, we've seen gains, but I feel like maybe are they getting capped by some farmers selling here, possibly, Jim? Not only U.S., but even South America as well. It just feels like wheat is trying to drag quarter beans along with it, and it is to some degree, but also it feels like we're kind of bumping up against some resistance here in the quarter bean markets.
There's no doubt about it. I think you are seeing some of the short covering. You're seeing the wheat. The funds are short corn and wheat, or corn and beans, like everything else. If you look at the ag sector as a whole, Jesse, as of the CFTC report last Friday, they're not as big as a short as they were carrying earlier this year, but they're dang near close to it. So they're all in. So they are getting out, but there's no doubt about it. We are running into producer hedging. I know I had some of my own clients who have sold some grain on this uptick. They've got a decent basis in certain locations of the country. Now you got the board firming up a little bit. You do have May options going off the board here at the end of the week. And you have some clients, no doubt, that maybe had some contracts against the May futures, and they're pricing that out. The other thing, remember, is like you said, the producer right now, when you remember the quarterly grain stock report, as of March 1, the producer had about 1 billion more bushels of corn on hand than they had a year ago. Now, remember, the projected carryout's going to be about a little over 2 billion here at the end of summer. So there's a lot of grain that needs to be moved. And I think you're right. We are capping some of that. The corn market is in the bean market to a certain extent, or definitely hitting a little bit more resistance than the wheat market. Our wheat producers right now, the further west you go, like I said, it's very dry right there. So they're very hesitant to sell. So you're not getting that hedge pressure you're seeing. Now, the corn market, you're seeing old crop sales, but you're also seeing some new crop sales. It's kind of been a weird dynamic this spring. It seems like either you didn't go at all the last week, 10 days, or you went crazy getting some of this corn planted. And I think, in general, with a 2 billion plus carryout, rallies are meant to be sold. And like you said, I think that is capping it a little bit.
Well, and with that too, corn's just there hasn't been much to talk about in this corn market, and so I'm trying to get some of that farmer selling, as you mentioned. And with soybeans too, it's felt like to me that soybeans have kind of been in this downtrending channel of sort, and I've been a little more concerned about the soybean charts. But yet, same thing with corn here. Both are kind of getting pulled higher by weeds and kind of maybe bucking some of that bearish sideways-esque trade that we've got accustomed to here over the last few weeks, Jim.
I mean, you're right, Jesse. I mean, we've been in a downward trend. I think the beans are probably the bigger concern at the moment. Look at the bean oil. Bean oil market's been struggling a little bit here recently. I mean, the fact is, a year ago, we would have talked bean oil was a story. Everyone was very bulled up on bean oil demand on this whole renewable diesel. And I think that is a story to be told. And I think it's a story that's going to be very exciting. But the reality is, at the moment, you're getting other vegetable oils that are competing right now with bean oil, and they're winning at the moment on the price point. The other thing is, we're just not exporting a whole lot of beans. Our window to export beans is shutting very, very quick. If you look at inspections and sales, once we get to this time of year, we pretty much lose market share to the Brazilians and the Argentinians, and we struggle to do it. So you're down to the domestic crush. So the bean market's probably going to struggle the most unless you really get into the weather situation. Remember, that acreage survey also suggested more bean acres for this upcoming year. So if you get those big bean acres planted, it's just going to be one more resistance point on the market. The corn situation is a little bit more dynamic in the fact that we are in our window where we tend to export a little bit more grain. We are close to being price competitive since the day to day with what's going on in South America, but we usually have a decent window for it. The corn acreage, 90 million acres with trend line yield of 180. If you leave demand unchanged year on year, you'll add a couple 100 million to the pile. If the corn acreage ends up being over 90 million acres, it could be a little bit more negative. But so the corn might have a little bit more bullish story, but I want to be, want to make it clear. I'm friendly near term, but I think in general, you got to look for rallies to be sold because the dynamic, unfortunately, still is a little bit negative in the broad picture without a weather problem.
Jim McCormick with agmarket.net joining us here today on Market Talk. Jim, I want to throw an idea out here for you that we can talk about a little more on this demand side as you kind of referenced there. Soybean demand for the U.S. has not been great. This is kind of our corn window right now. There's been a lot of talk, especially on like Capitol Hill with this ag trade deficit and talk of some of the tariffs that are still in place on China and the U.S.-China relations and where's China in these grain markets, et cetera, et cetera. I wonder if with how the trade flows have shifted, if maybe these markets got to get used to a new normal, to use that term, so to speak, here, as China's largely going to South America and other places for their grain right now. I mean, what do you think about this overall demand picture? Are we trying to adjust to a new way of life, so to speak?
I think we're going to have to, Jesse. I mean, that's the brutal reality. The dynamics changing. Brazil's got more acreage to plant. I mean, I saw one estimate, I say it's suggesting as much as 90 million acres of ground in Brazil, not rainforest, ground that used to be pasture, that is arable. They just need the investment to put that money in to get that up and going. And they're asking for international investment for it. They will get that international investment, and they'll probably get it from the Chinese. Remember, the Chinese also came in here, a year and a half ago, and signed the standards to start importing Brazilian corn. And I think that was a game changer. So where we used to be the situation where China came in and bought a lot of our product first, I think we are going to be the second store. If Brazil doesn't have it, they will end up coming to us, but they're not going to come to us first. Part of its currencies, part of its politics. I mean, right now, when you look at the bean sales, China normally has purchased at least some new crop sales. Last report I saw, China has not bought any new crop beans, and I think that is a concern for us near term. Part of it's probably the tariffs. Remember, President Trump put tariffs on. President Biden did not relieve those tariffs. He kept them on. And then, the fact is we're getting the political season. Now, I think earlier in the year, the Chinese were very leery about what President Trump could do if he gets reelected, because he's talking about more tariffs. The number fluctuates depending on the speech, but in general, more tariffs. I think that's got the Chinese worried. But, President Biden didn't exactly shy away from it, because now he's talking about putting tariffs on steel. And, it's kind of that tit for tat type of situation we're seeing. It's just encouraging situation, demand to essentially move away from the U.S. And like I said, the Brazilians got the land to take advantage of it, and they're going to. Now, it's not all that dire. I want to stress that, because right now what I just said was pretty dang on doom and gloom. But there is definitely going to be some opportunity. And I think in the long run, it's going to be very good. Renewable diesel. That is taking off fast and furious. There are a lot of plants around the countries that are being built as we speak, and that'll be coming online here at the end of the year and through 2025. And I think that's going to be very, very good. I mean, originally when we heard all these renewable diesel plants coming online, Jesse, you might remember there's a lot of people saying, oh my God, we're never going to produce enough beans to meet that demand. And I think what you're going to see is we're going to continue to lose export market share. And as we lose that market share, we're just going to keep it more and more domestically, which may be better off in the long run. It's going to employ U.S. workers. And on top of it, it's going to be more sustainable and more stable, kind of like ethanol, where how many billions of gallons or billions of bushels of corn we're going to use in ethanol. You're going to start seeing that for beans. And the beans situation is coming on quick. Now, the corn, it's a little bit more of a struggle. That is going to be the renewable. That's going to be that SAF, essentially turning ethanol into aviation. That technology is there from what I can see, but it's not able to do it on a mass proportion. Mm-hmm. But the technology is there. The willpower is potentially there between not just farmers, but big oil per se. So I am optimistic that we are going to see a shift in that. And I think it's going to be important as we lose demand of ethanol to electric cars, which is still the trend over the next 10 to 15 years, as well as we're going to lose market share due to the Brazilians, I fear. So I think it's a situation, it's going to take time, but I think in the long run, we are going to see a nice domestic demand for these products. I think that'll be very good. That transition, though, as you see transitions from time to time, it usually is going to be a little bit rougher than we want. And if I got to be a little bit more doom and gloom on one thing, it's going to be more of the corn than the beans. Simply, like I said, this corn situation of changing it to jet fuel is a lot more complicated process, and we're not there. Part of the other problem we've got to get is this carbon capture. I mean, it's kind of a two-edged sword. The whole idea, Jesse, to get jet fuel green is you got to get the corn green, in essence, to essentially get the credits. To get the corn green, I understand you've got to get this carbon capture, and that's where the problem comes into is we got to get the pipelines laid, and it's going to be a little bit political fight to get this through, it looks like. But I think that is where we will eventually get there, but it's going to take time.
Well, and with all that in mind and the shifting demand dynamics, I think it comes back to, some folks are maybe waiting for this big demand-led rally in the grains that may or may not happen. So you kind of have to take all of this into account and be a smart risk manager right now, don't you, Jim?
I believe so. I mean, the reality is, I think to me, I think if we're going to have a rally, it's going to be a weather-driven rally. It is not going to be a demand-driven rally, from what I can see right now. Unless the South America, Brazilian, safrinha crop just falls on its face here, and there's no one looking for that. We know the Argentina corn crop's a little bit lower, but there's enough grain in the world to get by, to our crop. And if we have a normal crop, the world's going to continue to build on ending stocks. So the idea that we're going to get China to come in and buy a lot of corn and a lot of beans right now, I just don't see it at the moment. Yes, I think we've got maybe a story in the wheat, but the reality is we harvest wheat 11 months out of the year. So it's hard to keep a wheat story going overall. So the risk we believe here at our group is to the downside. And, when we get opportunities, they always say you get an opportunity once or twice to sell corn profitable. We're going to argue you get that opportunity, you need to take it. And then if you want to defend against the what if, and the what if is going to be, let's be honest, Jesse, is a hot, dry summer. And that's all going to determine, I believe, on how quick La Nina comes in. The quicker La Nina comes in, the more risk we have of having a hot, dry summer. If the La Nina takes its little bit of a time and it shows up in late August, September, we set ourselves up for a potentially very good crop. Timing is everything, as they say. So I think you got to be prepared for the bearish side, because the reality is if we happen to have a very bearish move down into the fall, it could really get tough into 2025. Statistically, real quick, I know we've taken a long time. If you look at historically, when you have stocks to use from like 2014 to 2019, stocks to use were 12 to 15%. Corn prices went to $3.50 on the cash market, plus or minus 20 cents. The board went below $3.50. So if we have a decent crop and you're talking stocks use 15, 60% on this new crop, I think there's a legit probability corn could go down to $3.50. Well, the reality is if you got DEES 24 corn down at $3.50, what's the best case scenario? DEES 25 corn, $3.75, $3.90, maybe $4. Nobody can make money in DEES 24 corn. So there's a lot of pressure to make sure you make money, I believe, in 24, because if you swing and miss and don't get this grain marketed, 25 could be very, very tough with normal weather.
Real quick on livestock trade as we wrap up here today, Jim. Cattle is a mixed bag. Feeders had more follow through on Tuesday after that friendly cattle on feed report Friday. Hogs testing some of the recent highs. It feels like in this protein sector overall, we're kind of getting back to trading fundamentals here more so than news headlines like the HPAI news. Your quick thoughts in livestock trade.
Real quick today, a lot of it was spread trade, buying the hogs, selling the cattle. A lot of guys are jumping on that trade pretty hard. Hogs look like they could go back up to the highs. It looks like tight supply moving in. Cattle's an interesting situation. The headline broke the market, obviously, on the bird flu. It's moved to the back burner. The overall supply is still very tight. Tightest supply, in 50, 55 years. But if you look at the amount of cattle coming at the market right here, right now, they are heavy. We do have a decent supply of beef. So it's going to be a situation of supply versus demand. Supply is a little bit worrisome at the moment, but demand right now, Jesse, overall, looks still very good. A lot of people are worried about the economy. I know I'm worried about the economy, but the reality is good, bad, right, wrong. That consumer continues to want to spend money, go out to eat, and go on vacation. Airlines are looking for packed jets this summer. That tells me it's going to be a summer of spending a lot of money, and that traditionally is bullish beef.
We could probably go another hour, but we're up against the clock. I know folks could find you and the team there at agmarket.net very easily online, agmarket.net. Jim McCormick. Jim, it's always great to talk with you, sir. Thanks for joining us. Have a great week. We'll talk to you again soon.
Thanks again for having me, Jesse.
Jim McCormick with agmarket.net. That's going to do it for the show. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.